Eric Mwathe with Mwathe.com with this weekend's world market analysis for the weekend of March 26th, March 27th. Let's take a look at how markets closed. The end of the week here, we can see that Japan was slightly up, so was China, and we see here that Hong Kong was down and the Kospi was unchanged. Australia was down about a percentage point. European markets, I believe this is Thursday's trade. Pretty much we can see Thursday was a down session, Friday being a holiday, many parts across the globe. Take a look at the US and Americas here. We see that Brazil and the Americas here was pretty much unchanged. Canadian market was unchanged, and we see that the US market did end the week with a little bit of a mixed to unchanged picture, with crude oil being down about 0.83 as of Thursday's trade. So let's go to the world charts. We begin by taking a look at Australia, and what we can see here is that on the monthly chart across the globe, monthly charts continue to show support on this line that we've been talking about over the last couple of weeks. And as long as the Australian market continues to hold on this line, which has been great support, and this is a representation pretty much of most global markets, that the markets are coming back to test the monthly RSI support line, which is a green line. And as of right now, we are looking at markets in 2016 holding right there on the line. So on the monthly, very simply put here, as we come close to the conclusion of March, is as long as the market is holding above this green line, markets should be good to steady. Otherwise, we have to be aware that as we begin a new month, if for some reason we stumble back below that green line, that might suggest that the market is now ready for another push lower. So right now, monthly charts across the globe look good. Across the globe, we are looking at weekly charts posing a little bit of a problem for market. And we can see this resistance mostly on the RSI, as we had been talking about. Here we are looking at coming back to test the break of the highs here. So that RSI break brought the market off the highs of 2015. We can draw a line from there, and that line should tell us where markets stall. And we can see that every time since then, since this break here of the highs, every time we touch that red line and are rejected, the market makes a short-term high. We came close here for the highs of December, and now we've come here and we are showing rejection on that red line. So week to week, we are looking at markets here posing a little bit of a problem because we have been unable to move above that level. There's also another line connecting the previous support line, and so you just draw it like this, and you can see here we broke through the line there for this movement low. We've come back, we've hit that same line on a back test. We failed during that period. We came here and failed again on a back test failure for the highs there, and now we've hit that line and we are showing rejection. So if I can draw it again, you can see it more clearly, and this is a representation of the fact that weekly charts are coming back. As you can see, break of the highs, resistance, the highs there, resistance here for the highs there, resistance there for the highs here, and now this has been confirmed as resistance. And so if you couple that with this previous break line that I just drew, we can see that those two lines come, and here over the last week we hit those two lines, and now we are pulling back. So the weekly charts pretty much across the globe all look the same, pointing to markets that on a week-to-week basis are now starting to look like they want to pull back. If you take a look at the China daily chart, we can see here there's two layers of resistance. Go to the highs here on the daily, draw a line connecting RSI highs. You can see that we connect to the highs here coming close there, and now we hit that line and we are already seeing a pullback. So that is resistance number one, and then resistance number two goes back to the break of the highs. That break right there, we can draw a line from there, and it gives us all the sell points. You can see there was another trend break here, that break of the highs there, and now we've come back, we hit that red line also, and we're already showing a pullback. So until the market can clear those two lines, net one has to assume that the Chinese market is also pointing down to be consistent with weekly charts on other markets across the globe. If we take a look at the Japanese market, connect the highs on the daily RSI, so just go back to the highs here, and you can see, similar to Japan or to China, it hit that level over the last two weeks or so. We seem to be pulling back. Also, if you can see the break off the highs here, so that break off the highs corresponds with the RSI stalling here. We can draw a line from there. So this break in the RSI brought the market off the highs. Draw a line, and you can see again it was a break back below the red line, was a pullback off the highs there. We came close here and we've hit that line, the red line, on 3 occasions. And as long as we are showing resistance on those 2 lines, one can assume that net here's another market that is generally pointing to the idea that net there's a pullback in store, unless the market can figure out a way of moving above those 2 lines of resistance. If you take a look also at the Japanese market, I think what's going on here is coming back to test this breakpoint. The breakpoint in a trend, the most recent trend, broke down here off the highs in the 19,000 area coming into 2016. We draw a line from there, and you can see right now we are still holding below that red line. So as long as this line is being offered as resistance, one can still expect that the market is still on a pullback mode. As far as the monthly chart is concerned, the monthly chart continues to be okay, because you can see that as far as Japan is concerned, there was a breakout here in the RSI in late 2012, which began this fantastic move to new highs. And so we can draw a line from there, and we've bounced on that line already on a monthly chart. So that's very good support. As long as the market is holding above that green line on a monthly, the monthly chart is very bullish. Now we have to be aware here as we go to the new month of what could happen if the market comes back and breaks that green line. Should the market break that green line, then that would be the signal that we are due for another deep correction. But for now, net until we break that line, one has to assume that the monthly charts continue to be okay. If you take a look at the Indian market by way of the Nifty, we are coming back to test the top side of this weekly trend line. I can draw it like that, and we have not been able to move above that line. So until we can move above that line, and especially if we continue showing resistance on this line, so either we can break out here for a move higher, or we can show resistance, and if we hit that line and start pulling back, one can expect the next swing trade to be down. Also, I believe what's going on here is that the market is coming back to test the 50 level of its weekly RSI, and if it cannot hold above 50, there might be a sign there that the market wants to pull back. The last time we came to the 50 and stalled was here, which was in October for the highs there. So we have to be sensitive here now that the market moved above 50, that if we stall back below 50, that might suggest that that is the beginning of the next swing trade, just like we did during this period here. If you take a look at a 5-year weekly for the Nifty, you can see that take the top side of the weekly RSI. I should draw it something like that. You can see that we are coming back to test the top side of the weekly RSI. Right now we are back to that line. If we can't move above that blue line of resistance, if we cannot move above that line, one can expect the next swing trade to be down. Also take a look at the break of this 5-year weekly. There was a break right there, and that break brought the market off the highs. As you can see, a break there brought the market off the highs there. We haven't been back to those levels, and so we can draw a line something like that around the 50 on the weekly time frame. Every time we've hit that red line since then, we've seen a short-term high in the market. Rejection here for a short-term high, rejection here in October, November for the short-term high, and now we are coming back to test that line. So this 5-year weekly chart does show that if we move back below 50, that would be confirmation of resistance and that the next swing trade is possibly to the downside. On the 1-year daily, one can see that there is a clear line of resistance that the market is coming back to challenge, connecting daily closing highs there, through the daily closing high there, and now coming back to test that line. So as long as the market is struggling to hold above this line, one can expect that if we can't move above this line, that the next swing trade is going to be to the downside. And in fact, if you take a look at a 2-year daily, let's take a look at a 2-year daily for the Nifty. You can see here off the highs, so we can figure out this is where the high was recorded, and it corresponds with this high in the RSI, or this break, that break in the RSI. So we draw a line from there, and the market has been using this for resistance. Double top here on the daily for the highs there. Here again, some type of double top for the highs there, and now coming back, and we are above the red line. So if the market is to move higher, it definitely does need to hold above the red line. Otherwise, the risk here is that we eventually roll over and we have something showing uniform activity rejection. If we get uniform activity rejection here, then that suggests around here there's some type of a swing trade to the downside. And as noted, don't forget that on the daily there's some type of resistance here based on the previous highs on the daily, going back to the highs of 2015. So it really depends on how the market responds. If the market can hold above that red line, so right now we are looking at potential for a daily breakout on the RSI. So as long as the market is above that blue line, we can give the market the benefit of the doubt. Let's go back to the 1-year daily. We can see recently we jumped above this recent daily closing high, and since that breakout, the market has traded well, closing higher every day since then, and the level to watch there is 7531.80. As long as the market is holding above the recent highs, we can give the market the benefit of the doubt. So holding above this is good as long as the market can hold above that level. Let's give the market the benefit of the doubt. Keep in mind that we're pretty much trading in a sideways market because we are trading between the 200-day moving average and the 50-day moving average. So really generally probably what we're looking at here is a market that is for the most part sideways as it continues to trade between those two moving averages. On the hourly, we can see here that the market made higher highs over the last couple of weeks. While this was making slight higher highs, the RSI really hasn't traded higher, so that's negative divergence that could stall the current move. Take a look at a 5-minute chart, 10-day 5-minute, and you can see here improvement in highs here, here, and then here. So a slight improvement in the highs. While that is taking place on this 5-minute chart, take a look at the RSI, which is definitely showing negative divergence. So again, short term, we can see here that the market is setting for some type of a pullback based on negative divergence. Want to take a look at the long-term monthly chart, and the long-term monthly, as we've seen in other markets, continues to show support on this green line, which has been support over many years. The most recent being this uniform activity drop below the red line and back above it for the re-entry there. We touched the green line for the re-entry there in 2011, and here uniform activity support. So monthly charts look good, weekly charts are suspect, and so I think I lean to the market probably showing some type of resistance based on weekly charts for the most part. Take a look at the South African market, which is also showing resistance on the weekly time frame, and here we see that we had broken through this support off the highs here, and now we came back early 2016, and we seem to be stalling on that same red line, as you can see there. Previously we hit that line for the highs of October, and now we are coming back with uniform activity rejection. So as long as the market is showing resistance on this line here, one can expect that markets are telling us after a nice recovery here that potentially the next swing trade is going to be to the downside based on this weekly chart, unless and until the market can move back above that red line of resistance on most of the weekly charts. Take a look at the weekly chart here, and on the French market we can see the weekly chart confirming resistance again. If you take the line connecting RSI highs, you can see the weekly chart here showing it has come back and failed to hold above that line. Also, rejection at the 50 weekly RSI level might suggest pressure to the downside. Keep in mind, on the daily for the French market, we had come back to test the previous break point. This break point here recently was a problem in December, so we can draw a line from there. You can see here we hit that line, the double top, and now we are pulling back. And also on the monthly, it's probably one of the first markets that I've noticed that it is down for the month, and now we are back to that look where the RSI on the monthly is close to three-year lows, if not already at 3-year lows. So the risk here is that the French market moves to 3-year lows. If it stays at 3-year lows on the RSI, expect continuation of a move lower. Monthly charts on the MACDs also continue to be trading at 3-year lows. So here we are starting to see at least one world market showing that the monthly charts are not holding as they were during the most part of the month of March. Take a look at the DAX, and the DAX is coming back to test the top side of its weekly RSI. As long as we are seeing resistance on this top side of the weekly RSI, one can expect that the next swing trade is down. Take a look at the German market on a daily chart. We can see that it's coming back to test top side of its daily RSI. We've hit that twice over the last 2 weeks or so, and so we can see here already seeing a pullback. So as long as the market is showing rejection here on the weekly and dailies, one can continue to expect a pullback. If we take a look at the FTSE, we can also see that the RSI is coming back to test the recent break off the highs. So the break there off the highs, we haven't been back to those levels. We draw a line from there, which is slightly above 50, and you can see that over the past 2-3 weeks the market has come back and hit that line, forming a double top and double rejection at the 50 RSI level, which is not a good sign. Generally speaking, suggests that the next swing trade for markets here should be to the downside. And this is again not the only market showing weekly resistance. Take a look at the Canadian market coming back to test recent break level. So there was a break here in May of 2015, and over the last couple of weeks we've come back to test that break line. And as you can see, this is uniform activity rejection for now, suggesting that as long as the market is below that red line, one can expect a continued pullback. We can also watch the recent weekly closing high in case the market is actually poised to break out, and the level to watch there for potential breakout that we can set an alert is the recent weekly closing high, and the level there is at 13,522.0. So anything above that level would suggest that the market has finally cleared resistance at the red line and also above the recent weekly closing high. But generally speaking, we have to respect the fact that we are coming back and we are showing rejection on the weekly RSI, which is something that is consistent on many of the world market charts. So this rejection here for me suggests that net we should not be too surprised to see the market pull back. And so what we have here is, again, we see that we made a higher high in price, lower low in technicals. We've pulled back slightly, so we have resistance on this line every time the market tries to move higher recently, and yet we've come back to test the RSI support line. As you can see, you can even draw it a little different. Start from here. So we've come back to test the RSI support line. So really here we are stuck in a wedge on the hourly. Top side resistance, bottom side support. If eventually we can break out, that would be very bullish. If we break down, that obviously is going to be very bearish. But I think net I'm looking at the weekly charts here. As long as we are showing rejection on this line, one can expect a pullback, expect a strong pullback if and when the RSI moves back below 50. Let's conclude here by taking a look at the weekly chart for the EWZ. You can see that here, after a nice move off the lows here at 37,000, moving all the way to 51,000 in a couple of weeks, that's a big move. And so now we come back to test the highs here, the move off the highs. The RSI broke down right there. They're breaking the RSI September 2014. Draw a line from there, and you can clearly see rejection here for the highs of 2015, and coming here already showing rejection. So on this 2-year weekly chart, we're already seeing rejection as far as the Brazilian market is concerned. As long as it is below the red line, one can expect this to be a continued move lower. Take a look at, let's go back about 8 years on the weekly chart for the Brazilian market, and we can see also that the same line of resistance. So we come back to this level here. This break in 2014 is what we're looking at. It's a problem in the current market, but I want us to back test this one, go backwards, something like that. And you can see every time we have a major pullback, it begins with breaking below the red line of the highs of 2008. We broke through here for the highs there. We touched that red line for the highs there. We touched this level here for the highs there. We were rejected here for the highs there. Rejection here for the highs. And we can see that even in the current market, rejection. And right now, back to resistance. So given that this is where the market has been stalling over the last couple of years, and the fact that the market itself is still respecting the red line, one can expect that this is telling us net the market pulls back until at some point down the road when it can finally muster enough energy to move above the red line. So net I conclude this video with the suspicion that net most world markets are pointing to the fact that potentially the next swing trade is to the downside. Eric Mwathe, Mwathe.com. As always, good luck, peace, and blessings. E-A-C.